Thorsten, and with Tim. So I'll ask you to please join me here on this couch, and just maybe while they are coming, acceleration is the word, you've heard it, or how Srini called it yesterday, Beschleunigung, right? So it's about being reliable and Beschleunigung, so acceleration. Here we go. So let's see if we have some questions. I've seen quite a few guys already on the screen, and we start with Akhil. Akhil, can we have your question, please?
Yeah, of course. Good afternoon. I've got one strategic one and then two hopefully very quick financial ones. I think in Thorsten's presentation, he talked through the fact that obviously one of the biggest value creation events for Deutsche in the last 5-6 years has obviously been T-Mobile US and the decision to stay in that market and then merge with Sprint. I guess the question was, if we look going forward, do you see any other transformational strategic decisions on the horizon that you're thinking through in terms of the Deutsche equity story? Or do you think the story going forward is much more operationally driven instead? So that was the first strategic one. And then the two financial ones is, Christian, in your presentation, you talked about the target of the 6.5% ROIC. I think in Srini's presentation, he talked about Germany going from 6% to 9%. The US, I assume, will have a very good return given the high cash generation. Can you maybe help us bridge why the total is only 6.5 if Germany's 9 and I presume the US is very good? And then the final bit was just on the dividend. I think there's no doubt the dividend growth is attractive and I think is very healthy. But I guess even at the high end, the dividend's about a 4 billion euro dividend, whereas your guidance basis cash flow is 18 billion, and that's about 11 billion proportionate. So it's about the third of your cash flow generation. So just if you can maybe comment on how you think about that in terms of what the residual cash would probably be used for if we think about midterm and what your priorities would be. Thanks a lot.
Who wants to start? Strategic question, Thorsten?
The first one? Mm-hmm. Alrighty, Akhil. Look, 2 months ago, I would have said that for the next 5 years, this is all about operational improvement, performance, utilizing the best network in the 5G world and doing more of the same as in the past. You know, we have the capacity, we have the speed, we have the quality in the network to exactly do what this fantastic team in the US has done over the last 7 years. Over the last 2 months, though, Verizon and AT&T have shed media assets. And I'm asking myself, as you may ask yourself, what does it mean for the future? Number one, certainly it's a kind of recognition how strong we have become. So it's a focus on the wireless operations of these two big players in the US market. So they take us very, very seriously. And second, which also underlines the value that we can bring to the table, the question lies on the table: what is the next kind of effort to differentiate in this market? If it is not network, which is what we have. And there we have learned a lot of lessons in the European marketplace. Convergence is one of the topics that may come up in the future. One of the reasons why we'd like to retain control, because if anything happens in the future, you want to have a juicy control premium for shareholders. Having said that, Akhil, I don't have a crystal ball. We started in 2013 as the smallest mobile operator, and at the end we were able to consolidate, and this great team in the US is now challenging the number one position in that marketplace. Who knows, maybe we get bigger. I have no answer on that, but certainly it will be an interesting period of time. I think we will enjoy operational upsides and a wonderful network with a lot of capacity, and then we'll see.
Look, on the ROCE, Akhil, first of all, we're predicting a ROCE larger than 6.5%, not 0.6.5%. But I think yes, the number in Germany is right, but you also heard Dominique that she will continuously take time in order to move its ROCE up. And don't underestimate the investment level coming from the US. We just added another 8 billion euros of spectrum. There's a massive build out, so that burdens the NOAA. So it will take some time until the US is actually progressing in these levels as well. So I think it's a composition of different pieces, but you're right, the German figure is already at 6% and will further grow. On the divvy, look, the divvy, as I said, is you can expect that the divvy will increase given the EPS growth. And what we have consciously discussed in the team is that we wanted to have some flexibility on the divvy payout. And this is why we came up with that payout ratio of 40 to 60%, by the way, which is well established in other industries as well, because we don't know whether we actually have the flexibility to pay out more, which is towards 60%, or whether we have to stay strict because we haven't secured the 50.1% in the US yet. And therefore, we basically came up with that solution. And the third one is, look, even if we get to the 50.1%, we also have to think about our leverage. And we said that we are getting back into the comfort zone end of 2024. But again, this is another delay by a year, and therefore I think that was all factored in into our dividend discussion.
It really is about a balance, isn't it? And we'll strike the right balance. And the other point, I think, that you rightly pointed out, it's nice to have these choices because your free cash flow per share is over 2 euros in a few years, right? So that's good. Next question is from George at Citi, please. Thank you, Akhil.
Yes, good afternoon, guys. A couple of questions for me, mostly focused on towers. The first question is to just get an understanding of how you are thinking about your tower value crystallization. Price not being the determining factor, and let's say similar price, would you have a preference for a clean exit or to still maintain exposure in any deal you agree? And my second question linked to that is whether you believe in in-market synergies within towers, and particularly in Germany, because there are some limitations perhaps that don't exist in some of the other countries. And then my second question, again on towers, is a bit more of a long-term question about your overall network infrastructure. You spoke yesterday about cloud-native networks. I think Srini also mentioned the importance that telcos could play in edge cloud. So I'm just trying to understand whether you believe these investments are better done from a tower perspective or from an operator level, and how that could change your view of the strategic importance of towers versus the edge cloud. Thank you.
I think the first one is one for Thorsten. And
I take the first one?
Yeah.
All righty.
We get volunteers for the second one.
Preference for a clean exit or to main exposure in a deal, and whether we believe in market synergies. Look, first of all, we have learned a lot over the last 3 years. We've teamed up with Cellnex for the Sunrise Towers in Switzerland. What did we learn? We learned a lot about that the Cellnex management team is certainly one of the smartest I have met in this sector. Second, how you make money in this game. And it's all about build to suit, especially for the number 3 and number 4 in the market. But this also becomes build to suit for the number 1 or number 2 in the market in the future. Second, of course, in-market consolidation of assets that you own is something that creates a lot of value for a TowerCo. Cross-border synergies are limited, as we all know, also in the tower sector. But this is not to say that a management team with a smart headquarter and a very smart M&A head is able to add a lot of value. I think Cellnex speaks for itself of how rolling up towers in different countries can create a lot of value for investors. Second, in terms of the preference, I don't have any preference, neither has this management team right now. We are just saying we are open to a lot of options. We've looked at a lot of stuff. We know what the pitfalls are and what the pros and cons are. And as Tim is always saying, let's attack and see. and I like that. I was thinking about just putting my cell phone number in front of the page and said we are now open for business. We are in a different state than 2 or 3 years ago, or over the last 2 and 3 years, because we've recognized that the valuations have moved to a place where it makes sense for us to engage, and most importantly, where the MLA structures provide enough protection for us to further differentiate. And that is a key thing for us, because we also see the tower model in the US. Keep in mind, we sold our towers, or part of our towers, in 2013 to Crown Castle. And we know how it is to deal with tower companies in the US. We know what we have to avoid. And therefore, we are open for business now, and there will be, I'm excited to what may happen over the next, call it 1.5 to 2 years until the next Capital Markets Day.
I think the next one is for you. I guess it plays to networks of networks and how we orchestrate that. Well, I think it does. So let me answer it because that's because I think it is in the context of what Tim presented yesterday, the networks of networks. We have the capability to orchestrate this, and we will not always be the owner of this network in every place, but we'll put it together in the best possible way for our customers. So I think
I think what we wanted to say, and I don't want to repeat what I said and what Claudia had said as well. The idea is this ecosystem is changing. And in this changing ecosystem, we should be adaptive to all the developments which we see. And we should not do that naively, but we should do it. And, I know a lot of partners are watching the Capital Markets Day. They sent me notes. And being at the Microsoft people, being it, let's say, my friends, at Cisco and other companies. So these people have, they're not competitors, but sometimes they're even not friends. So, we have to find the right doses on partnering with them that we create win-win situations in this digital ecosystem. It's a very complex one, but we have opened our doors to partnerships. And by the way, that's not something new. Remember, the first, Capital Markets Days was about win with partners. And now I think we've grown up in this ecosystem. And when it comes to the architecture of our networks, when it comes to the softwareization of all the functionalities which we talked, both on the consumer and use case side, but as well from the way how we organize our businesses, we have to embrace them. And that is what we're doing. And how we then share the trough, how we share then the value chain, that is something which we have to then negotiate. But I would say the last years taught me that's a win-win, and that we were, more winning from these partnerships than losing.
Great, excellent. So thank you, Tim. And the next question then is from Josh at Exxon. Josh.
Thanks, guys. A few quick ones, hopefully, from my side. First one is just following up on the towers question. So what percentage of your German towers today do you consider to be genuinely strategic and differentiating that you might want to retain some kind of reserved control over in any future tower structure? The second one is a slightly annoying one about cash conversion. So one of the things we often get asked about with DT is what's the real post everything else free cash flow? And maybe just if you could give us a direction of how you think things like finance leases, vendor financing, etc., would trend over the next few years as well would be helpful. And then the final question is just regarding your comfort range on leverage, because I think a lot of the last 2 days has been talking about why DT, partly through its European operations, but also US, is a different kind of telco given its higher growth and exposure in assets. So the question is, what would you need to see happen in your performance to raise your comfort level or comfort range for leverage? And at what point do you think you could say this is a business that should be levered more at 2.5 to 3 times than the 2.2 to 2.7 you talked about today? Thanks.
Can I start with the last one? We will not change the corridor, to be very clear. And the reason being is The reason being is it forces discipline into the organization. I'd rather prefer to tell you I'm out of the comfort zone and having that deliberate discussion with my peer and left colleagues on an ongoing basis than basically lift up the comfort zone. I think, and mathematically you're right, Josh, because you know that the lease impact is about 0.4 points right now, and you could argue, but for me it's a disciplinary activity to keep the comfort zone where it is, and then I'd rather prefer to delay returning back into the comfort zone. Second point is, if you take a look at the share buybacks which are coming from the US, they will not stop in 24, right? There's an official program going into 25, so that will help us to deleverage, and it will continue the years beyond that. So on the leverage, no change, and keep the discipline. And keep us honest on this one.
Thorsten, on the towers?
On the towers, yeah. Just one sentence here on debt. I think one thing that is kind of noteworthy is that leverage is good for equity holders as long as your EBITDA and free cash flow grows. And obviously we are also in a different environment than 10 years ago, where interest rates were much higher than today. You see that we are also as a team discussing these kind of topics. We feel much more relaxed today than maybe 5 years ago when the leverage ratio was lower. But this is not to negate what Christian was just saying, just an observation. Second one on towers, yeah, of course there are some strategic towers. I cannot give you a kind of sense. Maybe it's 5, maybe it's 10%. It's much less than you think, because it's no longer a coverage game in Germany. We still have an advantage there, but given the license requirements, also the other guys have to move up, and we are open for business on co-location. But we have some juicy rooftops that in any case we cannot share, by the way, but these are differentiating things for us. So the old discussions that you had in the past about, how many strategic sites you have, is much less than a lot of people are thinking.
Okay, let me just dwell on the free cash flow. So our clear ambition is to make the free cash flow as healthy as possible. Give you an indication. Recall back in Q1 2021, we basically have reverse factoring, and we're trying to do this on an ongoing basis. Secondly, also the vendor financing in the US hasn't increased, while at the same time free cash flow is increasing. So from a percentage point of view, I think the dilution is coming down as well. On the lease trends, look, in the European business, there may be some slight increases because we have to build out into 5G, but it's not massive. I think the biggest question that was asked yesterday as well is obviously the renewal of the leasing contract with Crown Castle and SBG in the US, which we haven't mastered yet. And I would say once we're through this one, I think we shouldn't expect a significant increase on the lease trends going forward, because we struck deals which are 15 years long. So they will be basically, there will be no new deals coming soon.
Yeah, so no vendor financing, and T-Mobile has a constant level of finance leases that you know about, okay? And that's it, and otherwise it's squeaky clean. So with that, we move on, thank you, Josh, to Jacob at Credit Suisse.
Thanks for taking the questions. So I had a few, hopefully fairly straightforward questions. Firstly, I mean, you said you think DT is a sort of 20+ euro stock, but also you won't buy back stock in the next 2-3 years. Can you just help us understand, why don't you want to buy back stock? I appreciate you're growing the dividend, but why do buybacks make sense for TMUS but not for DT? Secondly, in Thorsten's slides, you showed that you'd rejected 2 mergers with a European tower co and a 50-50 JV with a European tower co. Was that purely about price, or can you maybe just sort of help us understand the rationales behind those decisions, just to help understand how you think about this sort of concept of monetizing tower co valuation? And then just finally, I mean, it sort of sounds like you've become more flexible around your ownership of mobile assets. and also on the fixed line side, where, as Srini mentioned yesterday, you expect to own 60 to 70% of the fiber assets long term. So I guess the question is, could you look at broader monetization of fixed line down the road? Could the German fiber network sit in group development in a few years? I'm just sort of interested in how you think about that. Thank you.
My God, Jacob, a very, very good question, and I couldn't agree more on the buyback topic. However, you also know our leverage constraints, and you know our priority of retaining control in the US. So first comes first, and then comes second. So much to that, but I certainly, it's not lost on me and on us here as a team what you are saying. On the, let's say, tower discussions, let me keep this private because we signed NDAs. But I indicated to you before that MLA terms, price, premiums, lease liabilities, they may hit you, which is kind of a very odd thing here in European accounting, something that I don't understand. You know, I'm coming from a cash world and not from an accounting world. It's lost on me how you and why you have to capitalize this OPEX at these low NPVs, at least low discount rates, and then all the nice benefits of a deal are gone. But I recognize that two things have moved a lot, especially last year when the first American came to Europe, and then the subsequent acquisition in the French market by Cellnex, that terms have improved significantly. So just take this as my answer on your very good questions.
Let me add two topics. The first one, by the way, I'm totally with Thorsten, with you. Why not doing earnings per share buybacks on the stock? My first observation in this regard is there's a difference between the US and Europe when it comes to buybacks. In the European environment, I always see it a little bit like a lack of strategy if somebody's doing a buyback. And now I would not say that we have a lack of strategy, but I think we have a lack of communication and conviction. And therefore, that we are holding a 9 hours, a capital markets day, that we're constantly on the road, that we are trying to convince you guys on Deutsche Telekom stock. This is, let's say, our answer on this one. So then rather, buying back our stocks, we are trying to attract, investors into our stocks. So that's, I think, my approach on this one. And dividend is for me, a more sustainable instrument which shows our conviction into the future prospects, and rather doing a 1 or 2 times share buyback on our stocks to just be happy with the price we see. But the undervaluation is for us is obvious, and we have a lot of bets about that one in our team here. My second thing is about ownership on assets. I think we are, in principle, an infrastructure company, and therefore we should own the network. We are not a service provider. We are not a ServCo. We are an infrastructure company and a NetCo. And therefore our ownership on fixed and mobile gives us as well the credibility on this business. We have to run the networks. We have to build and run the infrastructure. And by the way, I even believe we do it better than a lot of other people are doing it. So therefore, the majority of our infrastructure should be under our control. This gives us a much more flexibility, even from the technical solutions which we are providing. Nevertheless, if you can't fight the dragon, ride the dragon. Our balance sheet is stretched. So therefore, and our capacities as well. And therefore, we cannot go for 100%. Impossible. Nobody is able to do so. And if you can't fight it, then you have to ride it. And therefore, our logical step is then to say, okay, guys, there are others who have maybe the same issue of utilization, their infrastructure. There are others, who have good technologies in areas where we have weaknesses. Let's partner. Let's create a win-win. It's coming back to my earlier point that we are open to this one. And this gives us much more credibility. It's, by the way, good for the consumers because the extension of the infrastructure is broader. And the monetization of that infrastructure as well. So therefore, I think this is the change in our thinking. And by the way, you're tapping a very important point because our network guys, our technology people, they love to own it 100%. They love to control the whole value chain. But that is not how the world is developing. And therefore, we have changed this paradigm successfully. And I think there's more to come.
I would add one additional point when it comes to separation complexity. We looked at this quite intensively a couple of years ago, and it's not like that you open up a zipper and the left-hand side is the go-to-market organization and the right-hand side is your network. It's a complex undertaking to really separate out a fixed network out of an integrated telco and take a look what has happened in New Zealand, not through that. So it's a very complex project with questionable financial results, whether this makes sense.
Yeah, and if I may add one thing, I think Srini talked about this yesterday. It's actually, there's a lot of execution and capability, opportunity and optionality in how you run the value chain in fixed line networks, right? I mean, ideally, you let others build some stuff that you really don't want to build, and you get onto the chain of the value where the money is, and then you use joint ventures and so on. So it's a whole range of opportunities and models that you have to orchestrate, and I think that's where a lot of the value creation will be in doing this in the right way, in Germany in particular. So next, thanks Jacob, and the next one is from Robert, Deutsche Bank. Robert, here you go.
Yes, hi, thank you very much. I loved the vision and drama over the last 2 days. It's been the best box set I have seen all month. Going back to the rump discount, if I might, either investors don't like the US, which is clearly not true, or they think the ex-US part is worse than other telcos, which cannot be true, which leaves the interface, which is the problem, and relates to intragroup cash flows and how cash gets back to shareholders. One issue causing confusion is the buyback versus the dividend from TMUS. Are they fully fungible and make no difference to you guys in your thinking? And how you take benefits. I'd like a comment on that. And going back to the payout ratio, having a payout of earnings is entirely logical as a proportionate measure. But compared to non-telcos, Deutsche Telekom has a high D&A versus CapEx. The dividend did get cut and interest rates are rising. Yet it seems you are still cautious, especially at the low end. So from the previous comments, it seems that it is the leverage target. So if you monetize some of your portfolio, will that directly release cash for distribution and we can expect the payout to move up the range? Thank you.
Thanks, Duan.
So let me start with the payout ratio. Look, first of all, yes, we're not paying at the same level relative to other competitors, but other competitors don't have the same business profile as we have. And we're growing much faster, by the way, across the Atlantic, meaning the US and an ex-US. And I think that should be considered as well. I'm not sure whether we're cautious. But on the EPS, let me remind you, we said it's greater 175. And greater 175 means that the full potential is above that level which we're communicating right now. And what was the question with the DT has a high D&A on CapEx? Can you help me out on this one, Robert?
Yeah, that was the point around the payout.
Okay.
That basically your cash flow is growing far, far faster than your earnings is the main point. But I think you've answered that. My other question is about the getting cash back from TMUS. Does it matter whether you get it through buybacks or dividend? Because investors kind of think it somehow does. But is it fungible?
Fully fungible.
It is fully fungible. Actually, from a tax perspective, a share buyback is better than a dividend. So, and you have heard the US team saying we perceive ourselves as a growth company, therefore we prefer share buybacks way over the dividend. So I think that was a very clear message.
But they also said there's buybacks for 3 years and it won't stop in 25. So it's, as far as we are concerned, it's about as reliable as a dividend. Okay, hope that's a good answer, and let's move on to, thanks Robert, to Polo. Again, here we go, Polo.
Yeah, hi, thanks for taking the questions. So we've got 3 quick ones, hopefully. The first one is really just about German politics and also the EU Recovery Fund. So most of the German political parties have published their election manifestos, and the Green Party, SDP, FDP all seem to be proposing increased investment in broadband infrastructure. So how do you think this will impact the evolution of the German broadband market, and could further government subsidies lower German capex for DT going forward? And also, how should we think about the impact of the EU Recovery Fund on the German communications market? Second question is really just about German headcount, because Christian had a slide showing 85,000 FTEs in the German region, but with digitalization and also an acceleration in the number of people retiring, how should we think about German headcount in the longer term? And my final question is really just about risks and opportunities, because it's clear that the main message from the Capital Markets Day is about accelerating growth. But if you look at your 2024 objectives, what is the one area, and this question for you, Tim, what's the one area that you're most excited about, or what do you see as the biggest opportunity? Similarly, what do you see as the main risk to achieving your targets?
Zwischen 20 und 30, aber wir haben die genaue Zahl.
Polo, first thing, by the way, it's interesting that we had only one question to regulation so far from doing all this 9 hours. And that shows me that we all perceive, the regulation is relaxing and it's getting better. And I talk for Germany in specific on the regulation side, and I was preparing myself here for this session. I was thinking about what is good and what is bad and what is open. And what is good is, the new telecommunication law is opening up, better ways of building infrastructure in Germany. It is an ex-ante regulation. It supported all our wholesale deals, which we had with the partners. The Nebenkostenprivileg is fallen. Now, okay, you can complain that it takes a few years too long, but in principle, it is decided. We had not a decrease of wholesale prices. The opposite is taking place, and the regulation in principle is supporting this. The national roaming is not over yet, but it is still there with regard to Jans and Eins, but the likelihood that that is legally enforced is not there. So in principle, I would say the regulator in Europe and in Germany are very much, on a track to ease the situation than worsen the situation, which is a good signal. On top of that, Europe has 750 billion funds available for the recovery, and Germany on top of that 140 billion only for Germany, which are standing there. We have reacted on that one. We have built an own organizational unit analyzing this different pots here and applying to this one appropriately. Honestly, I think the biggest problem is not the money. The biggest problem is the application process. And therefore, I have even personally initiated at the BDI, which is the Industrial Association in Germany, an independent support that private partnerships, getting built, that, we find methods that this money is getting into the system quickly. In this organization unit, we found out that something like 25% of the whole money is relevant for us as Deutsche Telekom, including T-Systems business. And for this money, we are now organizing ourselves to apply for that one. To give you a relevant example, schooling and the digitization of schools. not only talking about fiber, talking as well about the cloud, talking about the running of the system is one of the elements. Second, we have seen all the things around the Corona One app. We have seen the elements about the exchange server. Deutsche Telekom is the one providing the global vaccine passport. We have seen initiatives about more subsidization for rural areas, for connectivity. By the way, they're not part of the German program because the money was available already before that. You should add them on top of that one. We have a discussion about Gaia X. Money is available for that one. We have money for Open RAN. Deutsche Telekom with partners has opened up in Berlin an own lab for Open RAN, where in the field people can test it. So the money is flowing already today. We are applying in a very professional manner to this one. Our involvement, and you see that I can talk an hour for that one, is high. I'm personally involved into a lot of, let's say, debates on how to allocate best the business that digitization is leapfrogging in Germany, and that is the way going forward. We will see that over the next years now how it comes into the system, and the application is the challenge which we see today.
Okay, let me pick up on the headcount question, Polo. So first of all, this is not a new process. We're reducing headcount in Germany since many, many years in the vicinity of 3 to 5%. It depends on the year, on the programs which are running. I think the basis for this is, I mentioned this in my presentation, is a very productive interaction between our HR organization and the social partner. We have a well-established process. We don't make this with a lot of noise. It's kind of a continuous decline of the headcount. So do we see acceleration? I said in my IDC program, look, this is a lower ambition relative to the 1.5, the 1.2, and that is also due to the accelerated efforts which we're doing on fiber. So we are, to a certain degree, restrained of letting people go because we're putting more capacity demand into the system in order to accelerate the fiber build out. And on the retirements, to be honest, we can wait another couple of years. I think they're kicking in 25, 26, so we don't have the luxury like the French guys had that they could let people go because of the of retirements. So it will take quite a bit of time until we get to this. But in the middle of the 20th, then we're going to see an increase of natural levers.
Great. But look, and I'm maybe a veteran already in this scene here, and especially when it goes to the city. There is this narrative that when you think about Germany, headcount reduction is impossible. We are anyhow not cost disciplined because we always want high quality, and we are not able to reduce headcount. And if you see the constant decrease in our organization, if you see that we have over-delivered on the 1.5 billion cost savings which we have promised, I think this narrative is wrong, and you have to do it in a right way. It doesn't make sense to make that very loud and noisy and announce big programs. I think in Germany the culture is to do that in a kind of competition and joint effort with our Works Council. There's no way that this is stopping. And with Srini on Germany, you have a no bullshitter sitting on there. That's business. And he has started, by the way, in alliance with the unions to think about how many SG&A, how many quality assurance, how many administrative people do we need in our organization. And that is even, a new push which came to the organization from that angle. So I think when it comes to our 3 to 5% EBITDA, that there is more cost discipline in every element needed to achieve it.
Look, on the opportunities and risks, our plan is prudent, and we discuss it back and forth. And if you take a look, I see currently more opportunities than I'm seeing risk, to be honest, because I think we have the worst times of COVID probably behind us in the next couple of months, and people are becoming more optimistic. There is a significant backlog of digitization efforts, being in the public sector, being in it with small companies, and people actually value quality, which should help us in the proposition which we're providing to customers. We have a fairly rational market environment, and I hope that it continues to be. Obviously, it cannot influence 100%, but what we've seen in the past actually gives me confidence that people are staying disciplined also and not becoming lunatics on pricing or something like this. So right now, I think I'm hopeful and confident that we actually achieve those numbers midterm and short term.
Excellent. And there's some greater signs in front of some of the targets. Okay. Thank you, Polo. And next is Andrew. Hey, Andrew.
Hey, everyone. Thanks for the last kind of 24 hours of answers. They answered a lot of our questions. I had one on Thorsten's slide 22, which is one we've all been struggling with. You know, what gets DT to €20 plus stock, and specifically the Temus valuation in DT. So, you know, you guys obviously read analyst reports and speak to investors, and loads of people have highlighted that the DT European stub is cheap. Lots of people have highlighted it, but it hasn't really made any difference. Maybe DT Europe's super cheap. You know, what it looks like is that DT investors aren't paying the right value for Temus within the DT share price, or at least not the same value as Temus investors are paying for the Temus listing. So the question is, why do you think this valuation discount exists? And outside of buybacks, is there anything you can do to make sure the DT shares better reflect the value you highlighted in Temus and for DT overall? Great if you could also explain what you meant by seeing is believing. Thank you.
Thanks, Andrew. I know that you have written about this and quite smartly picked this up as well. It's a difficult question to answer, but we have seen this game being played out in many different sectors and also in our sector. For example, SoftBank and its stake in Alibaba not fully reflected in the SoftBank valuation. Sometimes you have then to crystallize this value, which we try to achieve by highlighting the value of our towers and of our Dutch operations. But I think if it comes to the US, people are just waiting as an investor in Deutsche Telekom that they see the benefit of the value in the US in the dividend. And that is what means seeing is believing. I think if we hit the €1.75 in EPS, we can pay a much higher dividend, and then the bots will buy. So I think it's a timing question. Keep in mind that over the last 5 years, T-Mo US has appreciated significantly in value, but other than seeing it in the cap markets day at the capital markets as a valuation, the DT investor, the DT shareholder, hadn't had the benefit of a higher dividend or cash coming out of this investment. So I think this is a timing issue. We want to bridge this timing issue because it also gives us a greater pleasure to work and more optionality in the future if our share price is higher. And therefore, as I said, it's not lost on me that some people are arguing, hey, why don't you buy back DT stock at this valuation if you are convinced in this? By the way, we had a similar discussion a few years ago when DT's T-Mo US stock was at 45, and some people internally were arguing, hey, why don't we sell some T-Mo US stock in order to fund some stuff or buy back DT shares? And I told these people the same thing that I tell them today. We have a leverage ratio that we want to bring down. Second, we have a priority because it is financially very attractive in our view to be invested in the US, and we don't want to get anywhere near kind of trap where DT shareholders are not getting the benefits of the cash that is being generated in the US. It's not to say that we will not support kind of creative ways that Mike and the team comes up with investments in the US. But I think, to cut a long story short, seeing is believing. We need to see a higher dividend because that's the benefit that the DT shareholder wants to see, and we want to help a little bit by crystallizing that. Just look at it, Germany and this wonderful European operation, which is growth, with its EBITDA margins and its cash conversion. If you really look at this, sometimes I think, oh, hopefully we can list Europe for a second, yeah, and put a value on this as well. Then the market would better understand the benefit of having these assets not fully reflected in the share price.
Okay. You know, if Thorsten would be the CEO, I would be the chairman of 20 companies, I can tell you, because everything would be in the market. You know, Europe in the market, the systems in the market, Deutsche Telekom Germany in the market, US in the market. our Mr. Portfolio here. Anyhow, that's a funny remark. Look, I can tell you two things. The first one, we have a lot of internal bets about the $20. And there are bets like, you know, the moment we get it, you know, we make a big donation to a good purpose. Thorsten was even dancing on the table in our supervisory board, promising the $20. So Andrew, so that was a big commitment. I was sitting under the table, and then we had the discussion as well internally on, you know, what can we do and what is the reason that we are not there yet. And one of the observation is that a lot of the machines are buying our stock. And you're looking at it, and I think you're spot on. I saw your report recently, and I think, you know, you got the points, and you understand our business. The machines, they're looking on different criteria. And one of the reasons that we are focusing on earnings per share seriously is that we believe that we can trigger additional demand on our stock by focusing on understanding better what machines are doing. And that is one of the reasons that we are changing the paradigm here a bit. So this is one of the elements. It's not about our fundamentals. It's not about the future prospects of our business that we are doubting. I think it's the way of communicating and addressing the market. The second thing is, and I have to say that, because I got some harsh mail from one of our competitors about my presentation, where he said, look, it's totally unfair that you compare your total shareholder return with ours, and you show yours growing while mine is shrinking. This is unfair. This is criticizing my work or whatsoever. I can tell you, I was not criticizing the work of the European peers. And I know how tough the work is for Orange, Vodafone, and how great they're doing, by the way. The only issue is, you know, if you're living in Europe alone, we are in this narrative, Europe is a lost can. And nobody gives a dollar on Europe in the telecommunication space, which is accelerated the issue. I think we are in Europe, all telcos, the good ones, are undervalued in the way how they're doing. And that was, I think, the story. If you cannot win in Europe, then you have to find ways, you know, and you have to manage with the situation. And that is, I think, what we did. Changing the portfolio, focusing on the US, investing heavily into that business, having the merger on the hand, doing some structural changes. This is, I think, the message we did. We did okay in this regard, but we think we can do significantly better. We believe we are 100 billion stock prospectively, and therefore that's what we fight well. The third answer, Andrew, you know, when we run out of this Capital Markets Day, and we were not allowed to do that earlier, this team is buying a big pile of stock. This is another commitment because we believe in our shares. We were not able to do this beforehand because of the insider information we had, but we will do that right after that event. And please follow up on that one Monday. So it is even put your money where your mouth is. You know, I'm heavy invested in their stock, double digit. And, you know, I believe it's coming. It's a question of time that we see that. And I feel like an entrepreneur in that company, and we have to move on. Honestly, I believe we will see it It's only a question of time.
Thanks, Tim. And just to repeat some of the numbers, greater 175 in 2024. Christian said it's going to go there in a basically straight line. So next year, earnings are up. Over €2 free cash flow per share, proportionate free cash flow per share in 2024. It's also not, it's not a J curve. It's a straight line. So that's what people will be looking at. So that gives us confidence. And it's not a jam the future story, right? Okay, so let's move on. Thank you, Andrew, and move on to Usman. Hey, Usman.
Hey, thanks for the opportunity again. I have two questions, please. Firstly, on the special factors, cash outs in the ex-US business. They have, you spoke about some of the reasons why the cash flow guidance in the ex-US business was a bit lower than the CMD in 2018. I guess one of the factors I can see is that the special factors cash are slightly higher, 100 to 200 million higher than what was, expected. Now, and I just wanted to understand, what happened there, and what is the outlook here to 2024? I know in the CMD 2018 presentation, there was a kind of a chart showing, the special factors cash items going down to around 700 million. But is that still the outlook, or is it different? And if so, why? The second question is for Thorsten. Just on maybe pushing back a bit on what is in group development and what isn't at the moment. I mean, T-Mobile Netherlands obviously doing really well. There's fiber uptake happening in the Netherlands, so there, ARPU uplift and the market seems to be, in a very good place. So why is it, why should it not go back into, DT's ownership rather than you wanting to monetize that asset? And just related to that, I guess, is there any scope in T-Systems, where I know a deal was attempted with IBM in the past? I mean, is there any scope to do anything, with regards to T-Systems that can, better surface the value of that business?
Okay, let me start with the special factors. So first of all, Usman, you're right. We predicted a significant decrease towards 21. I think we have been in the previous Capital Markets Day a little bit too optimistic. And on the other hand, we also have reduced costs significantly higher than we anticipated to be, and therefore we needed some additional special factors in order to fund this. So if you take a look forward, so let me basically describe it in a free cash flow environment. We have EBITDA growth, which funds our expanded CapEx envelope, and the free cash flow growth in the European business to 4 billion. And all of the other items are basically neutralizing themselves out. So what we're going to do is we expect obviously higher cash taxes in the upcoming years. At the same time, we're going to see an improvement on the working capital, and we're going to see an improvement on the special factors. So, but this is at the outer years of the current projection, and we see whether we get there. But the last Capital Markets Day was a bit too optimistic on this one. But I think it's worthwhile to spend those special factors. You have seen our indirect cost structure, and especially the significant amount of people which we let go over the past 4 years.
Good. Thorsten, you want to talk about the Netherlands?
Yeah, with the Netherlands, and I need a tissue because I'm so. Well, first of all, Usman, it's a very fair point. It's our crown jewel in the European portfolio. But having said that, it's mobile only in Europe, in a market where you have two converged players. So this is something that doesn't fit into our long-term, let me stress it, European strategy of owning FMC converged operators. And that's the reason why we've also taken it apart from the group in 2017, not only to focus in intensive care on this, I don't say this word again, chicken XY, turning it into chicken salad, and I think now it's a coq au vin. So, no, I didn't say that. So from that perspective, it's now the time to crystallize the value. But don't get me wrong, or that if the value that someone is offering us for the next let's say, 5 years of journey with this fantastic team and fantastic company. We may not sell it. It's just now we put it out there so that you see that on the sum of the parts value, there is something that has a value of about 6 billion according to your guesstimates. It gives us not huge deleveraging because we also lose some free cash flow, but it gives us some opportunity to do other stuff that we may want to do, which I don't want to talk about for obvious reasons. So flexibility is king. You know how much I like optionality, picking in different buckets and seeing how we want to play around. So we cannot say all in everything. We have good ideas what we want to do. And as much as I love the company, as much as I love the management team and the employees, sometimes you have to do stuff and to reallocate your focus. Let's put it this way. In terms of T-Systems, I think it's the same like on T-Mobile Holland. First, you need to fix an asset. And Adel started on a tough journey in 2018, and then he ran into Corona before you can think about doing something with these assets.
Okay, thank you, Thorsten. So next we have Ottavio at SocGen, please.
Hi, thank you for taking the question, and congratulations on the results so far. The first one, it's on the leverage, and it's for Christian. What I appreciate about Deutsche is that your targets is always been very consistent, clear, and I would like if you can actually give a bit more granularity on the assumptions behind. Because one thing about Deutsche that differentiates from a lot of peers is that you have room around your targets. You don't really go very straight to what you can achieve. So if you can tell us in terms of the assumption, what you have baked in the participation to the T-Mobile's payback, if you do, any settlement of the SoftBank options, I believe that you assume only cash, despite you got the option of delivering shares, DT shares in case. You mentioned about the renewal of the tower leases with Crown Castle and SBA Comms in the US. Do you have anything in that targets or any assumptions aligned in that one? So effectively, if you can talk around a bit the assumptions, because the target's clear and your commitment is even more clear, but it would be interesting to know what's behind in the assumptions. The second one is to Thorsten, the question. Now, your preferred partner, at least so far, in the tower space has been Cellnex. But what management of Cellnex keeps saying is that the value is not on the towers per se, but on the size and the future cash profile guaranteed by the tenants. So therefore, my question is, what is the contractual relationship between GD Towers and DET at the moment, particularly on the length of the contracts, any savings that is basically being granted to DET if new contracts are signed? Is there any escalator included in these contracts? And the third, it's again to Thorsten, it's a bit of clarification. When you talk about market leading on third-party share revenues, that's impressive. But I was wondering if the 23% ratio you show in the slides, it only reflect the revenue from hosting the antenna, or also additional services such as the backhaul services provided to third parties such as Telefónica Deutschland. And when you talk about monetization, do you also plan to crystallize the value of the backhaul? That's a big differentiating for Deutsche in Germany and I guess in other markets. Thank you.
Okay, so let me start with the first question on the leverage, Ottavio. Look, as I said earlier on, I don't want to change the corridor because I want to keep the discipline in the group, and I think there's a violent agreement among the board to basically stay like this. The second one is, look, we have clear visibility what we need in order to get to 50.1%. How many shares does this mean? Obviously, you've heard Peter Oswaldig yesterday talking about a share buyback of up to 2 times 20 in the years 23, 24. So obviously, the share buybacks will help us to increase our position. And obviously, we got the 45 million fixed price option, which will be accretive from my perspective, massively accretive, and gives us access to a low price to T-Mobile US and another 56 million on the floating option, which obviously need to be converted at a market price. There are other levers in place which we will not declare and explain. We have. Thorsten is always talking about optionality along two different dimensions. One is the tools which we can use. The second one is timing. I think we have time until 2024, and we will let you know whenever we have done something, what we have done, but I don't want to do kind of a front running.
Thorsten.
Oh, sorry, yeah. Preferred partner Real Madrid or the Cava. Of course, Tobias, Jose and Alex are right when they say the value is not determined by the number of towers, but the size and the cash flow profile from the tenants. Absolutely. And of course, we do have a market standard MLA in place between group development and not group development, but our tower operations and TDG. It wouldn't be a good use of our time if I now dwell on what are the terms, because in a deal, this will be completely started from scratch on, that you discuss the things that are important to us and important to them. And that is where you see that a lot of things have changed. Renewal clauses, all or nothing, or the kind of, as a number one or number two in the market, you may or may not like if a tower company is offering, which I could do today, but most likely we are not going to do this, to offer a very low price to get someone else on the tower. So this needs to be negotiated and be balanced out. I found it very interesting, the MLA terms to see on the last two transactions that were happening in the European place, and we cross that bridge if we get there. But in principle, it's absolutely right. The size and the cash flow profile and the commitment that you may give as an anchor tenant on the build-to-suit program that the Tower Co wants to offer. As I said to you, we have an attractive company because the cash flow is very interesting that this Tower Co would get, because we are going to build out a lot of towers over the next 3 years. And as I said, this year alone, we are building out about 1,500 towers. In terms of third-party share revenues, 23%. Yes, that's revenues from other tower cos. It's not hosting of any, let's say, additional services. There's a little bit of broadcasting in there, but that's not significant. And there's not backhaul in there. Of course, Bruno is always knocking on my door and said, "Hey, can we do this as well?" No, it's not, and it's also not planned to monetize this.
Great, thank you, Thorsten. We've got two more questions, time for two more questions. So the next one is from, thanks Ottavio, is from James at New Street. James, hello.
Hi everyone, yeah, can you hear me okay? Hello?
Yes.
Hi there, great, yes, so thank you. Yes, so I had two questions, please. The first one, actually a little bit of a follow-up from Ottavio's just now. For Christian, I'd love to go a bit more into detail about the kind of thinking about how you might be allocating cash towards T-Mobile. I'm a big fan of your decision today to push the leverage target out from 2023 to 2024. It's certainly on my numbers, that would seem to give you now flexibility to exercise that SoftBank option before 2023, which might not have been there before. So I suppose what I'm really wondering is, given you've announced the moving out of that target by a year, why are you also not announcing today exercising the SoftBank option? I mean, presume if you're bullish on the T-Mobile share price going up, it would be in your interest to exercise sooner rather than later. So just interested to understand a bit more about what are the factors you're thinking about there. And similarly with the buyback, I think Thorsten suggested you might sell in pro rata, you might not. I mean, given again, presumably you're bullish on the asset and you're wanting to increase your stake, what would be then the thinking on then going ahead and selling shares into a buyback, which might be seen as slightly contradictory if you're bullish on the long-term view on the asset? And then question for Tim. I know, Tim, you were bemoaning the fact there were no questions about regulation. So here goes with one, which is, I think, we've lived through probably 10 years of returns on capital declining in European telecoms, and now we're seeing really clear signs of it going up. I was just wondering, in your discussions with the regulators, how that metric is coming into play in your decisions. Do you find regulators have ideas of where returns on capital should be within the industry? Do you think regulators are happy with where you're targeting returns should be going? Do you see scope for further upside in returns beyond that before regulators might look to come in and at some point intervene again? Thank you.
Okay, so let me start with the leverage question and why don't we exercise the options right now? So first of all, 45 million shares are basically being determined on the transaction price, which is $101. So why should I do it right now? Because I have a guarantee on this American option to do it until the end of the period, which is 2024. The second piece is the factor that I have declared I'm out of the comfort zone does not mean I can do whatever I want to. So look, we expect this leverage right now to peak this year around 3.2, 2-ish. We'll see how it plays out. If I basically would exercise the floating options because I assume a higher T-Mobile US price, obviously that would increase my net debt, and we don't want to do this. And I think there's also a sequence, Thorsten, right? Do we have to do the floating option first or the fixed price option first? So we have to do the fixed price option first, so that's a theoretical argument. So I think, but there are other tools I think you can think of how you basically secure a lower price. We don't have to exercise the options right now, but we have clear visibility on how we get to that 50.1%. And the question hasn't been asked, but this group is really determined to get the majority to 50.1 and not 60 or something like this, because there are other things which need to be done in the overall portfolio as well.
I do not want to be disrespectful, but there's no politician in the world who knows what a ROCE is. So maybe Thierry Breton understands it, but return on capital employed and the definition of that one is something, internal rate of return. I even had a discussion where I talked about market capitalization and they were questioning what that is. So therefore, this is not something which is in the school books of politicians in Europe or in Germany. Therefore, make it simple. Talk about what's going on. And the pitch which we constantly do is, look, it's good that we have connectivity as a human right, and we understand that it should come for cheap, that people, don't have to overpay on their expenses on communication. But, if it's too cheap, then, we can reduce the costs. So allow synergies. But if you don't allow synergies because you don't want to see intra-market consolidation beyond what we have today, then you have to do something that there is enough funds available to invest into the expectation of higher fiber deployments and higher 5G. And so this flywheel which we have showed has to work. And I have to admit that in Germany, this flywheel works better than maybe in other markets like Spain or but that said, this is the way how they understand it. And now talking to Thierry Breton, talking to the German Chancellor's office, talking to the ministers here in Germany, my feedback is that they have changed horses. Their horse is, how can we create a digital sovereignty, especially from China? How can we guarantee security of the infrastructure going forward, that nothing is happening, that we never can get blackmailed from the outside world? How can we create innovation in Europe and enable digitization of businesses? And what is your benefit? What is your contribution to this one? How can you create an ecosystem for venture capitalists and cloudify this world So Gaia X is a high topic of political leaders. Wherever you are, you have this topic. And that is an impressive piece. I just had the day before yesterday, a session with the Bundeschancellor where she was talking to the industry on ID management. There's a super big initiative going on ID management in Germany, which shows that these guys are more on the use cases now than on the classical infrastructure. And this shows me as well that this ex-ante regulation is not that they are trying to steer it from political angle, but that they leave it to the industries. Now, I can tell you we will hear a lot of noise now during the course of this year in Germany, because every party will guarantee something to the citizen with regard to bandwidth, with regard to coverage and other topics. So we'll see how this is practically turned out at the end of the day. How it's getting financed. Nobody's talking about that. Nobody's talking about when and how this is going to take place, but they think it's needed. And that is, I think, the opening for us or for me to say, guys, we are willing to do so. We need that for our society. We're a big enabler for digitization and future wealth. Here we are, we need your support on this one. And then, OC and internal rate of returns and the amortization rate can be explained. And therefore, I think the balance of consumer prices to sustainable investments is getting into a much better equivalent.
Thank you, Tim. Okay, good. So it's all about equilibrium, right? And, yeah, that one. and in Germany, we since 1st of April, bitstream fees are no longer ex-ante regulated, right? So they are subject to commercial regulation and general cartel law. Okay, so thank you, James, and let's move on to Steve at Redburn. Steve, hey.
Yeah, good afternoon, guys, and thanks again for the excellent presentations you've given. I'll go for three if I can. I want to come back on towers, but I actually want to ask Trini, not Thorsten, who understandably has garnered most of the attention. Trini is... hello? I'm hoping Trini's there to answer the question.
Yeah, he's here.
He's just good.
Not on Trini, come on the screen.
Yeah, I guess, Trini, you've been on...
Take a mic.
You've been on both sides of the fence, in terms of running challenger operators, being in India, now running an incumbent in Germany. Just interested to hear your thoughts on the importance of tower ownership in Germany, compared to the other markets you operated in, and how active the discussion is between you and Thorsten in terms of, the future of towers within the German unit. That'd be super interesting to hear. And then a question for Thorsten. Clearly a lot of, funky infrastructure models out there on the wireline side. You can sort of goose the numbers in lots of different ways, but what's most important tends to be market penetration on network, how many customers you can get onto your fiber infrastructure. I'm kind of curious in that light how you think you'll make a return in Holland, where T-Mobile's got less than 10% retail share on fixed. The thinking about that, KPN's building to 80% of the country. So, how you're thinking you'll make a return on that investment. And then just a couple of sort of detailed ones on the earnings guidance. Can you just confirm that we should assume 50% stake in T-Mobile in the 175? And Christian, did you effectively place a ceiling on that stake at 50% in the last comment? And also just the tax rate you're assuming for the next 3 or 4 years in that guidance would be very helpful as well. Thanks.
Let me start, Steve, I want to hire you for my finance organization because, your face is always looking that serious and grumpy. I think you are very much qualified for our finance department.
Okay. After that charm offensive.
I've done this job for way too long.
Grumpy and focused.
Great sense of humor.
Yeah.
So, Steve, rather disappointingly, I agree with a lot of what Thorsten said. It's a lot more fun when I disagree with it. But let me give you a couple of perspectives on things that I agree with. Right. First, on Germany itself, I think Thorsten's right. There's a smaller than you think number of strategic sites, and those ones I'm absolutely interested in making sure that we keep those golden sites, or however you want to call them, right? Piece two for me, which is kind of just read across from some of the India experience on towers, how that compares to more mature markets. Look, I think there's kind of a couple of different tower plays, right? There's one which is effectively a pure financing play. right? Which is effectively exploiting arbitrage in the market. Now, I think you need to do it when you need to do it, depending on the state of your balance sheet. I think there's a more interesting structural play, which is bringing in genuine expertise into managing towers and creating real value from the towers themselves by either getting in a team that's been there, done it before, or actually creating more value through greater tenancy. And my instinct is always more on the second side rather than on the first side. And as and when we do stuff with the Kingmaker asset, I think what you will land up seeing is much more a sense of how do we create genuine economic value from this, and also how do we give ourselves exposure to an asset class that my personal belief is going to grow with time, right? Because I think that's the way in which more and more mature markets are going to get structured. So I hope that answers some of the questions, at least, that you had on it.
Okay.
We can't hear you, Steve.
Sorry. Hang on
Okay, so let me
go ahead. Alrighty.
Follow up with the earnings guidance.
Sorry, Steve. Let me dwell on this, and that you see that we are sitting here not fighting. Is the lessons learned over the last 3 years on towers. And I tell you, this is happening at every number one and number two operator in the market, where you have a guy who's running the NatCo, and then there's a guy who's running the towers, and it starts with just the CTIO running the towers, and then the fight starts. And you see the power of this team. We've lived through these discussions together over the last 3 years. We have a CEO in the German region who understands shareholder value and who understands how we can participate in this asset class, and that actually the towers are not a strategic control point. As long as you have an MLA in place that is protecting you via the golden sites, as long as you have an MLA in place that is protecting you from the tower core of dumping tower capacity to other operators at very low price, as long as you are not at the mercy of a tower core in price renegotiations and picking the towers, and if you touch the towers with new antennas. So I think that gives you a good indication that we are fairly advanced in our thinking of what we need in order to get the best out of shareholders, for our shareholders. In terms of Holland, this is a question not for me. This is a question that you should ask, obviously, the investors. And it's not lost on me that you look at it from this perspective, how you make a return in a 3-player market where you only have one tenant at the get-go. We have given, obviously, certain commitments. And of course, it goes without saying that this smart team that is kind of committing to build out 1 million fiber lines for us needs another tenant on it, and it will come over time. There are obviously also interesting discussions in this market about public to privates and what may or may not happen. But Steve, forgive me, this is a question that you have asked the FiberCo whether they make a return on it, and not so much for me. I like it because it gives me a showcase. I know what I pay for it, and I can go to the regulator in a non-regulated market and say, hey, there's a huge asymmetry. And second, it gives me something to support us on FMC in the future.
Okay. So on the earnings guidance, Steve, first of all, yes, we assumed the 50% stake in T-Mobile US. And again, let me repeat, this is why we said greater 175. And we assumed the current tax regime, which we have in the US, because we don't want to speculate where the corporate income tax is moving towards from 21%, nor do we want to speculate on a minimum tax burden, which is also being discussed. So I think we wait until the environment has come to or the politicians have come to a conclusion. But that's the answer for your question. Sorry.
Very good. And Steve, let me say, I work in the finance department of Deutsche Telekom, and I'd love to welcome you as a colleague. Okay, so let's work on that. And before I pass on to Tim for his closing statement, let me just thank you all for your kind and patient attention, the many good questions we have had, and also thank the management team and all those who have supported them to prepare these presentations. I'd like to thank my team for their dedication and their hard work. And I hope you take something away from this Investor Day that is, what we wanted to convey, which is our spirit of acceleration and excitement about the future and this very significant, highly visible and great earnings growth that is ahead, and how we will balance our capital allocation so it's to the maximum benefit of our shareholders. And with that, I pass on to Tim for his closing statement. Thank you.
Yeah, thank you very much, everybody. And before I go into the very short summary, let me say thank you as well. I'd like to thank Hannes for making this capital markets possible again, and all the content. And I can tell you, cannot believe how much work we have spent into that one. I'd like to thank his investor relation team and our strategy team on bringing all the stuff together. I'd like to thank my board colleagues, and the US team for making this event happening. And I can tell you, it feels a little bit here like X Factor, because we are sitting since 9 hours in one studio here all together. And I can tell you, always when somebody is coming off stage, we do this or we do that. And I can tell you there's one guy who is going into extension, which is Thorsten. Real Madrid against Bayern Munich, it is 0-0. And therefore he has to work on his presentation style and especially on the pictures on me. There's another thing I'd like to thank everybody who made this event here, even, from a COVID-safe working environment possible. So you cannot believe how difficult it was. And hopefully it was the last time that we had these difficulties. And even the technical stuff here, I'm very proud about technicians, about the camera people and all the people in the studios here, because it showed the digitization and the virtual world is really working. There was no slippery, nothing. Our network was always stable, allocating all the details. So great work. Thank you for that one. Now, summary. And I do that quickly because I know you are tired. I'd like to thank you for listening to us for 9 hours. And I was thinking about a picture. And you're sitting at your home offices and watching us for 9 hours. Think about watching 9 hours a Netflix series. How you feel after this binge watching of Deutsche Telekom. I feel sorry for that one. Look, this was the 4th episode of binge watching Capital Markets Days of Deutsche Telekom. I'm a main actor. I'm still alive. This is surprising in Netflix series, but that is good. The rest of the team is there. So thank you for 9 hours of binge watching Capital Markets Day. I hope you got something. I have to say there's one colleague, she didn't join us today, which is Birgit Bohle, our head of HR. And she deserves an appreciation as well because she was listening for 9 hours to her team here. I found, we can compensate that. For all of you, we make an extra episodes, 9 hours of HR. You will really enjoy that, I would say. Now, coming to some serious comments here remember on the last Capital Markets Days, I was on stage at the end and I was talking about the European market, a single market. I was talking about the regulation which is going to improve. I was talking about the opportunities of digitization. I was talking about the opportunities one might have in the US with a deal. And I was talking about growth. And at that point in time, I was sharing a lot of optimism in an industry which was in really dire states in a very pessimistic and negative approach. And honestly, now 4 years down the road, we delivered. We were able to deliver a company and to show you a company which is growing. I will do that again. And I do it again. I know that now we have accelerated on what we did. We have delivered on a lot of things. And we even say our targets should be higher than they were the last time. But I do that again because I'm optimistic about the opportunities around digitization. I'm optimistic about the setup of Deutsche Telekom and its portfolio where we are today. I'm very optimistic about the team and the attitude, the culture Deutsche Telekom has evolved over the last years, which gives us a lot of self-confidence, to tackle the challenges which is lying in front of us. And therefore, I hope that we were able to share a bit of that optimism around that we believe, we have a really right to play, and we should be the choice, the pick which you should choose in the telco industry going forward. I think Deutsche Telekom is not a one-bet company. We are a multi-bet opportunity. From all the angles which we are playing in the US with the synergies, in Germany now with our fiber attack, when it comes to the 5G deployment, the B2B opportunities where we as a former incumbent have all the right to play and to grow. This is a multi-bet opportunity, and hopefully we came across that way. Now the but. I can tell you, if the cameras are off, I will tell my team one thing. Do you believe everything you have said? This leading here, this kind of premium there. We are the best. We are outperforming all the others. I can promise you one thing. We are coming down to earth. This is something which we are striving for. This is something we maybe get as a feedback in our industry. But I can tell you, only the paranoid survives. And if we talk about leading is not for me something static. Leading is dynamic. If we talk about leading European telco, leading is not something which is a benchmark to others. Leading is an attitude. It's the way how we're striving all the time to do the best for this company. And I cannot promise you that we will deliver on all these ambitious targets which we have laid out. But I can you promise one thing, that we have the attitude to always do the best to achieve what we have committed over the last 9 hours. This is our playbook for the future. And we are trying to play that playbook as best with a leading attitude going forward. This world is not going to be easier over the next 3 to 4 years. We have this big conflict between China and the Americas. These two hemispheres which are decoupling. This is triggering challenges on the supply chain. This is triggering challenges about the volatility of markets. We have this huge indebtedness of our societies after COVID-19. We have the nationalism in a lot of countries who feel challenged from the rest of the world. We have political unrest in our society. And therefore, I think that the purpose of trying to help societies to become better, to enable societies for future wealth, to be sustainable in what you're doing, the purpose to bring that across into the companies and to your employees, this is a big driver for the energy which is needed to give orientation this time. Telecom will be a lighthouse, an orientation point for the society and its employees. And this, I think, is releasing a lot of additional energy, which makes us possible to fulfill the commitments which we give. And exactly that is, let's say, what we are about. It's about the passion for our brand. It's about the passion for the purpose of what we are doing for societies. And the good thing is, we are not stretched. We have one clear area where we are. We are the transatlantic telco. We are in one hemisphere where we can play this playbook. This is a big advantage, not only from a risk and a volatility perspective, but even as well from an identity perspective. So we hope that we can convince more buyers into our stock, more people who trust in Deutsche Telekom, the transatlantic leader. Thank you very much for joining us and hope to see you soon, healthy and physically.